Hey everybody, this is Chris with ORBTraders.com. I'm going to go over the September 22nd trade plan, and just a friendly reminder, I will be out this week. Will not be streaming, but I'm going to go ahead and kick off some of the levels to start the week and specifically for Monday. First, let's go over to Forex. Take a look at our news for the week. Monday, we have an FOM speaker at 10 a.m. This is Mountain Standard Time, so just keep that in mind. That's going to be at noon Eastern. And, it's an orange folder event, so medium impacted. We could see some volatility during that time. Then on Tuesday, we have Flash Manufacturing and Services PMI print. That is 15 minutes into the open. If I was trading, I will be bringing my laptop. If I do trade, I'm definitely going to be flat up until at least the 15-minute orb. Potentially the 30-minute, because we also have Richmond Manufacturing Index 30 minutes in the open. And then JP gets on the mic at 10:35. Again, that's going to be 12:35 Eastern time. Wednesday, new home sales, 30 minutes into the open. And Thursday, unemployment claims, final GDP. That is an hour before the market opens, along with all these other prints coming out. And then 30 minutes into the open on Thursday, if you got existing home sales. Friday, core PCE price index, that's 30 or an hour before the market opens. We could definitely leverage that as a potential data straddle passive one day. However, it's not the typical way to pass or the traditional conservative way to pass an eval. That would be trading your opening range breakout strategy, taking 1, 2, 3 trades a day. If you take 3 losses in a row, call it quits and move on to the next day. It's all about stacking days. And we all know that losses come with trades and trading, so you don't have to pass it all in one day, but that could be an opportunity if there's good volatility. Same with unemployment claims on Thursday, even potentially PMI on Tuesday, but I would not anticipate a data print like you see on PCI or CPI. That's an hour before the market opens generally. Anyways, let's just go ahead and dive into the levels here. So we've got the NQ and the ES looking at both on the 15-minute charts. First thing you're going to notice is this gray zone. This is the price action zone set on Friday. So just showing a little bit of shaded area. You don't have to add this by any means. You can do whatever you want. I've got the prior day high and the prior day low. That box is in that range. And so for the ES, 67.31.5. For the NQ, 24.888. All-time high, last week high, and prior day high. And then the previous high before that was actually 67.18. That's on the ES, and then 24.816s on the NQ. And I'm just keeping it there because that was a significant level that we did break through. We could fail and fall back underneath that, or we can continue up. We have been in a very bullish market, and with the rates dropping, even though the market priced that in and we had another rollover, I still feel very bullish. I think we could see 7,000 on the ES and 25,000 on the NQ before the end of the year, but we'll just have to wait and see what happens. So the other levels, as always, we've got the weekly highs, but then below we have our last week lows on the ES. That's at 66.11s. Then on the NQ, we have to go even further down to 24.2. And that is our last week's low. Sorry for my gaming pop-ups down here. Let me just go ahead and disable that. And going into a potential fib area. Just want to call this out. This is Thursday 9:18 session low to the 9:19 session high. We have a fib zone that is boxed in down in this area, the 38.50, 61, and then the final line in the sand at 78, very far below us. But just keeping that in mind, if that zone holds, we get a strong volume bounce and a good candle up, we could push up towards Fib 1, Fib 2, or Fib 3 targets later on in the week. So just keeping that in mind. Then we have some other fair value gaps. I've only just gone out and marked the highs and lows of these. So 24.801, 24/770s, 24/754s. This is a 15-minute chart on the NQ, and then looking over here at the ES, similar draws, 67.06 and a quarter. Let's go ahead and put the price on these other two, 66.99 half, and then 96.75s. So I'm just shading those, or having those lines there just to see if we go into these areas. I actually like to look at the mid-range points on these fair value gaps too, but I'll just spot that with my eyes if I'm in a trade. And similar to that other fib that I was looking at from Thursday to Friday, you have a support zone that is below us. We did, if you were to draw this actually and go further back and use the low to the overnight session, technically did already hit the 38.1, and the target profit for fib 1 is at 67.43. Above that is fib 2, and then fib 3 targets above at 67.84s and 68.54s. So we could see those, but I'm just gonna keep those boxed in for any potential longs that I may or may not enter. It's always good to have potential targets to the upside and also to the downside. Right now, I'm not actually pulling up any short targets, given how last week we have a bit of an orb fake out to the top side and then came back down. Really nice bounce off the prior day low. This is also the prior day low. Going back, or actually I apologize. Was this the prior day low? Or was this I think this was, oh, I forget. This was a level, can't remember what the hell it was, but there was, a bounce here. I could probably pull the trade recap. If we go into, let's just go back. Sorry for this. Let's go back to the orb squawk here. So we were looking at this last week. Okay, so it was a 50% bounce on a different fibs draw right below the overnight open, but it held above. This is really solid long. I know there's a lot of lines here. If you take all that noise out, though, you're looking at these daily levels. So overnight highs, overnight opens, unfilled gaps, and then the fib zones. And these gray lines are, again, just targets. But that was a really nice long that we took last week. So I'm going to continue to just monitor that prior day low at 24.708. Clearly there's some support there, and we did a nice run up from that point on. 188 points. I can't do math right now. Sorry, I'm in weekend brain mode. 24.708. Yeah, 180 points up off of that move. So definitely a significant support level right there. So I would just keep that in mind. Same goes for the ES. Obviously ES didn't go up 180 points, but anyways, that's it for me for what I'm looking at in terms of levels on Monday. Throughout the rest of this week, what I would keep in mind if you're just going to be trading, whether it's the ES or the NQ, just keep in mind what the lows of last week's were. We had a significant pop at 66.11s, which is very close to where we started trading the new contract, the Z contracts. All the volume has moved over, and now with the contracts expired, everyone's on the Zs. We could see some chop until we get some more catalysts throughout the week. But I would just keep in mind those ranges. I know normally I like to do just prior day high, prior day low, but it's also a good way to just visualize where we're at. Are we above the range from the prior day? Are we below the range from the prior day? Most of the times if you see us below, there could be a good opportunity to take a buy and come back up. But we'll have to wait and see what the London session and the Asian session do. Same for the NQ. We got some ranges here for the last couple of sessions, the lows and the highs, just to help visualize where we are at. And as always, the trade plan is the same, whether it's the 5, 15, or the 30. We're boxing that price. We're waiting for a breaker, and then we're going to wait and see if we get a qualifier. Sometimes you just come right back up. Another way you could certainly trade is the retest, where we come back down. We tag the top of the range, then you take your entry, and then you look for 50 to 100% of the opening range as potential TP1, maybe TP2, and then also TP3. And when you're looking at a potential entry, or if you're dollar cost averaging and you do a re-enter an add on your initial entry, where you go from one contract to two, or say you started with two, now you have four, I would certainly be looking at your internals at this point. If we get a touch on the top of the range after a breakout comes and we do a retest, I would simply just be looking over at the VIX, the VXN, the tick Q, and our equities to see if any of the opening ranges are holding. So if the VIX is breaking down and it comes back up, is it actually staying and respecting the low of its range and continuing lower? And is the ES just touching, respecting the top of the range and continuing higher? So you're going to watch that likely on a 1 minute or a lower time frame chart. But typically I'm looking for the 15-minute range to be set. Then we get a 5-minute candle to close above. And then after that 5-minute candle, we're looking for any potential retraces. Or if we get a candle that actually stays at the breaker candles open and close, at the breaker's candles close, and this candle opens up right where this one closes, and then it continues, 1 minute, 2 minutes into it, we could be taking entry here and using the opposite end of the breaker as our stop loss. You could also use the opposite end of the opening range as your stop loss. On the NQ though, if that's like 100 points, I don't know how many people are going to be putting a stop loss on the total opposite end of the opening range on that kind of a range on the NQ. On the ES, when it's like 10 or 15 points, I could see that. So you may want to actually leverage the mid-range point. So I have a study, it plots the opening range mid-range point. They are just these white little dots. I don't know why it's not pulling up here. May have to go down to the 5-minute. But essentially, I'm looking for that mid-range point. So here on the ES, and you can configure these, draw these out, whatever you want to do. But a lot of the times, if we get a breaker, we break above, you can either re-enter where it touches the top of the opening range again, or you wait till it goes to the opening range mid, and then line up your internals, get some confluence, and then take that trade and go long. So a lot of different ways you can play the opening range. I have some very basic pictures. I also just want to point out for those who may still be struggling with the concept of the opening range breakout and using internals. So I just want to break this down on a very basic level or detail. So if we look at the ES and we have the opening range set, we are waiting either for this candle to break while the VIX also breaks the opposite end, and then you could look for a touch back and then enter and then continue up. Same for the VIX. Generally, these are going to line up. I would say 70 to 80% of the time. It's not 100%. We've actually seen the last week action where the ES would break above and the VIX would also continue and break above. So that's a congruent trade. But the traditional method for these orb internal longs that I call the orb long traditional internal play is a break to the upside on the ES and then a break to the downside on the VIX. You can get confirmations off of the retouches and then fades for the VIX and the retouch on the ES and bounce off the open range high. And if you're going long, you're going to be looking for the tick to stay above the 0 line and preferably closer to the extremes. A lot of times you get to extremes, it's not going to stay up there that long, but I monitor that on the 1 minute chart and I do it in a very short time frame. So I'm not saying, okay, we're in the extremes, let's buy and hold it for 3 months. I'm scalping within minutes, 5 minutes, 10 minutes, a couple minutes, taking a trade and moving on to the next one. So that's the traditional play. There's also, that's for the longs. And then if you look at the short, you have very similar action where you have the ES breaks below, maybe it retouches, goes back inside, but it comes back down and you continue to sell off, while the VIX breaks above and maybe it touches again at the top, but then it stays above. And then during this short, you have the tick actually below the 0. So in confluence with the selling idea and short sentiment, you may even have this cross into the extremes, -600 to -1,000, or even further beyond. And then you have your reversals where you could see the ES breaks above and then actually ends up crashing, going the other way. Same with the VIX. You would see that behavior. And then for the tick, if the tick is above zeros, but the ES is starting to go below the opening range, you're likely going to see that tick go into negatives and go into extremes. Same for if you did a reversal to that strategy, the ES breaking below, so an orb short reversal, and actually ends up bouncing. You would see the tick in the selling extremes, and then that actually goes above into the positive extremes, while the VIX starts above the opening range, or starts inside, then breaks above, then goes below. So that's a reversal. So quick recap: orb long traditional, you got the ES breaking above, the VIX breaking below, while the tick is above zero. Orb short traditional, you have the ES breaking below, the VIX breaking above, and the tick below zero, closer to extremes. Then you have your orb long reversal, where it starts out inside, breaks above, and then it reverses to the downside, while the tick does the same, stays above zero, and then reverses to the downside, and the VIX acting inverse to the ES goes below and then breaks above and goes to the top of the opening range. Then you have your orb short reversal. So you call this whatever you want, orb short, bounce, whatever. The ES is inside the opening range, breaks below, but then it reverses to the upside. That was essentially what happened last week, where the VIX also was above and then it broke below, and then you also had the tick follow the direction of the ES. So just a quick recap. Hope you guys have a great week. I think that's going to be it for today's video. I will be back on the 29th, streaming again, and I'll go ahead and share out these levels. Trade safe. Talk to you guys later. Bye.